Hey everyone, welcome back to Corporate Decoder. Today we're diving into some corporate paperwork so thrilling it'll make watching paint dry seem like an extreme sport. We're decoding Motorola Solutions' proxy statement, which is basically their homework assignment for shareholders, laying out everything that's going to happen at the next shareholder meeting. Think of it as a cheat sheet, giving you the lowdown on who they want on the board and how much they're paying their top dogs. The big question, are they building a safe and secure future or just a golden parachute for themselves? Let's find out. Let's quickly check on their past performance because what happened in the past is the best predictor of the future. Since 2011, Motorola claims a total shareholder return of 1,475%. That sounds like magic, turning every $100 into almost 1,500. They also bragged about cutting the share count, making each remaining share more valuable and returning $21 billion to shareholders. Now, what about the most recent year, 2024? They say sales grew 8% to a record $10.80, so the company is profitable. Operating earnings are up 17%, which sounds good. It's worth noting that backlog, which is future revenue, is also at a record. They increased the dividend 11% to 120, also logged a record number of volunteer hours. Time to pick who they want on the board. These are the people that supervise the company's executives, so these people are very important. 7 people are up for election and most of them seem independent. A lot of these nominees have public company experience, which is important to have. Motorola also included a handy matrix breaking down the background of each board member, as well as which skills each one holds. It is worth checking that the skills of individual board members correlate with the company's financial strategy. Now for the part everyone loves to hate, executive compensation. Motorola is trying to sell us on how their pay is all about performance, with lots of at-risk compensation. Also, a large part of compensation consists of future pay opportunities. We now arrive to the part where Motorola does good PR. Their strategy includes environmental efforts and supply chain assessment. It is hard to evaluate how serious these efforts are. Now we get into the real agenda. First, they need us to elect 7 directors. Motorola's board seems to think everyone they've nominated is fantastic, with the right mix of skills. 6 out of 7 are independent. Motorola stresses their governance is top-notch, with all sorts of committees overseeing risks, ethics, and all that jazz. Let's quickly look at how the board members are compensated. Each non-employee director gets $110,000 a year, plus extra for being on committees. The lead independent director gets even more because leading is hard. All directors also get $245,000 in stock each year. Next up, they need our blessing on their accounting firm, PricewaterhouseCoopers or PwC. They want us to rubber stamp PwC as their official bean counters. The company paid PwC $9.6 million last year. Scrolling to where the fees are actually broken down, it looks like $8.3 million was for audit fees. Finally, there's the say on pay vote. This is where we get to give a thumbs up or thumbs down on how much Motorola is paying its executives. They're asking us to approve their executive pay, claiming it's all tied to performance. A no vote's mostly symbolic. In the end, what the company does with executive pay might be beyond the power of shareholders. The key numbers here are that Motorola achieved 102% of their non-GAAP operating earnings target and 108% of free cash flow. A high individual performance factor helps them justify even higher payouts. This is where things get spicy again, looking at their 3-year performance compared to the S&P 500. It's one thing if the whole market goes up, but it is significantly more impressive if you outperform all of your competitors. Before we sign off, it is worth mentioning that executives and directors can bet against the stock, which is good, meaning they can't engage in short selling of the stock. The filing also states that the CEO pay ratio is around 318 to 1, meaning the CEO makes 318 times what the median employee makes. I will let you judge whether or not that is a lot. Finally, there is the standard disclaimer about forward-looking statements, tough as so. What's the verdict on Motorola Solutions based on this filing? Well, they're definitely making money, touting solid returns and record sales. Risks exist in any company, and it is always a challenge to retain leadership and grow effectively. The management is doing a good job at creating shareholder value at the moment. Thanks for watching. If you found this dive into corporate governance enlightening, don't forget to hit that like button, leave a comment, and subscribe for more corporate decoder content. Until next time, keep those investments safe, and remember, even in the world of high finance, a little scrutiny goes a long way.